Hi there, it's Trisha, and I wanted to go over the trades that I took on Thursday, January 15th. Sorry that I'm getting behind with these videos, just things have been a little bit crazy at my house in the evenings. So I'm trying to catch up today with Thursday and Friday's video, so hopefully I'll get Friday's done as well. I took two trades on Thursday, and I used two trade setups, one taken off a longer tick chart, one taken off a smaller tick chart, but we always drill down using three charts in order to take a nice concise entry and keep our stops tight. So if you want to check those out, go to www.easyemintrade.com. I wanted to show you this. This was a scalp trade that was setting up short at about 10:06, and it was nice. I liked it. I did not take it, and I'll tell you why. I like it because we have divergence on our indicator. So indicator going down, price going sideways, so that's always a good sign. So we get our scalp occurring and you can go short. I chose not to, and the reason why is, as you all know, I don't like my stops to be larger than 2 points. So this is the bar that's set up. Obviously we don't know that at the time that our blue dot is occurring, how big this bar is going to be, but once it moves on to the next bar, well, we have a blue dot with our red momentum, so we just hit a market order. That's fine. But I will usually look at the bar ahead of me here, not before I place the order, just kind of am paying attention as price is moving as to how big the bars are, as I'm seeing something that possibly might set up. And this is a big bar. It's larger than 2 points. So usually what I'll do is if the bar is bigger than what I want my stop to be, I'll pass on that. And the reason why I pass on it is oftentimes the price can come back up to the higher of the prior bar, which of course if all I'm using is a 2-point stop, it's going to stop me out. So you do not have to trade that way. That's just how I do it. You do not have to do it. Obviously this trade would have worked out just fine, but these are just nuances that I've put into play over the years of trading. So again, not a big deal. If you would have taken it, it would have worked out fine, and it was a great setup. I just chose not to. The next trade that set up that was nice was at 11:35, and I passed on this trade because our trend indicator was not over 20, and also on our longer tick chart the price was not below both moving averages. So as you know, that really is not our setup. We require the price to be below both those moving averages. So even though it looks good on this chart, we have our scalp trade setting up here. We've got our blue dot, so that's great. We have divergence on our indicator, which that's great, but we do not have all of our requirements met, so you pass. And again, what you need to remember is that this would have worked, but it just as easily could not have worked as well. So sometimes you do get lucky when you don't wait for everything to be in alignment, but you're not creating something that's repeatable if you do that, because if you decide to break your rules the next time, you might not get so lucky. It might not work. So that's why I passed on this trade. This trade occurred at 12:24, and I took this trade. I took this trade short at 8:17, and I liked it because we have divergence on our indicator, which I like that. Price going sideways, indicator going down, that's divergence. We get our blue dot here, which means that we're getting our short to set up. So I hit a market order. I actually got filled over here on this bar, 8:17, and I used the trail stop method for my stops. So I had my stop here, pretty much stayed right there all along. As it moved down to here, I moved my stop to here, and then as price came up here, I got stopped out. So I had a gain of 2 on that one. Now, the trend indicator was not over 20, but it was close. It was just about at 19, and it was moving higher. So I felt comfortable in taking this trade just because everything was in alignment otherwise. So I decided to take the chance because the indicator was moving higher. Now, if it was close to 20 but moving lower, I would have passed on this trade. So this one worked out fine for a gain of 2. Now, I wanted to show you, this was actually going on 2 o'clock when we had a trend change. And the way that you determine if you're having a trend change, the way I determine it is basically if price moves back up over the 50% mark, meaning you take your high and you take your low of the day up until that point, and you just find the median, the middle of that price range, and if it crosses above it, now your trend has changed. So now we're no longer looking for shorts. So now you would be looking for longs at this point, because now the trend has changed direction. On our longer tick chart, we also have a trend direction change, and you could see on the bar that where our arrow is has now closed above both of our moving averages. So now we have a trend change. So now we would be looking for longs at this point. I also like the fact here just a little bit later that, I mean, you can see up to the point where our moving averages cross over each other, that they probably are going to cross over each other. So that's another strong indication that the direction is going to change. So that's good. So also, you've got a trend line here. Again, these are hand drawn on because I have not found any automatic trend lines that I like or that are available on Sierra. So you can see our trend line actually is breaking on the next bar. So you actually would have a setup there occurring. But I actually got in on a scalp trade, and I'll show you on the next chart, that actually was setting up on this bar. This bar was not quite closed yet, but it was very close to being closed. So I took the trade, and I'll show you why I took the trade. I took the trade at 13.51, and like I said, the previous bar, both our minute chart and our longer tick chart had not closed yet, but I felt confident that it was going to close above the points that we needed in order for it to be a trend change. The reason why is, we've got price going sideways here, and we've got our indicator going higher. What's that mean? Divergence. So usually price is going to follow the indicator. So when our scalp set up here to take a long, we got our first blue dot. So I actually the next bar placed a market order and actually got filled over on here at 826.50. So that was fine. I like that a lot. So I'm then using my trail stop method to move my stops. So first off, I've got my 2-point stop what I start with. Then I move my stop to here. I move my stop to here. I move my stop to here. I moved my stop to here, and actually got taken out right here. I had my stop at 831.50. This bar came down, and the low was 831.25. So it took me out. And actually, it went on to go just a little bit higher. But that's the way it is. Still loved the trade. I had a gain of +5. So in at 826.50, out at 831.50 for a gain of 5. I wanted to show you the tick, and you can see the middle line in the middle, and I hope you can see this. I know it might be a little bit difficult, but I could not get these bars any thicker, so I apologize if you can't see it, but if not, then you can just check on your charts as well. But you can see the middle line is the 0 mark, and as you know, to go short, so as you can see, for the majority of the day, right until basically I have this median line here, that's about when the trend changed too on our other charts. But majority of the day, all of our tick is spent below that 0 mark. And as you know, we like to go short when it is below the 0 mark, and we go long when it's above the 0 mark. So right when our trend changed, you can see now majority of our ticks are now above the 0 line. So just interesting point that I wanted to show you as to why I feel the tick is an important thing to watch. When trending. When it's not trending, it's a little bit more difficult when the market's not trending very much. But when it is, it's a powerful tool. So anyway, I took 2 trades today. Both were scalp setups. First one +2, second one +5. And actually the second trade, you could have also taken off the longer tick chart once you drill down to the smaller tick chart. But the scalp trade actually set up a little bit sooner, so I entered ahead of time, so I didn't have to actually worry about looking for a setup on the longer tick chart. But anyway, worked out great, and I'll talk to you soon.